Well, folks, I hope you're ready to get your flapjacks flipped out there. The stock market's about to get absolutely insane. I'm going to explain in this video what's going to happen here, why it's going to transpire, my predictions around this, and all that good stuff. It's an action-packed video. I appreciate y'all joining me, as always, from rainy and damp Las Vegas, Nevada here today. Yes, a very rare one of those sorts of days, but it is like that out here today. So appreciate y'all joining me. Before we get into this, make sure you subscribe to the channel. Make sure you smash that thumbs up button. And let's go ahead and get into this, guys. So we have been in sleepy times. I know a lot of people have kind of been bored with this market over the past number of weeks. And the reason being is as soon as you start to approach Christmas Eve, essentially, all the way through New Year's, it's just a very sleepy time in the market. It seems like there's nothing going on. It seems like there's like no big news, nothing. It's just completely boring times. A lot of Wall Street takes off considerable amounts of time during that time period because you have Christmas Eve, you have obviously Christmas Day, then you have New Year's Eve, New Year's Day, and then you have Martin Luther King Day, which is another off day for the market, which is on Monday the 15th. So it's just a very kind of boring stretch in the market overall. It's very rare you get any sort of big volatility in that market, and it's over. The insanity starts literally within 24 hours of me recording this video. I'm so well prepared for this time period that this is when I take my big unplugged vacation, is always at the very beginning of January, because it is such a sleepy time. There's nothing happening. I know that if I go away, do my unplugged vacation, there's likely nothing's going to have happened in the market during that particular time period, versus if I went in late January when things start to get crazy again. No, this doesn't mean the stock market's bad during that time period. Usually the stock market's actually very good. This is the average monthly stock market returns. This dates all the way back from 1980 to 2018, so roughly 40 years in there, about 4 decades, right? December is usually always very, very good. January is usually always very, very good. And then February is when things start to get shaky. Some years you get a good February, some years you get a not such a good February, and some years you get a very bad February. And it's a bloody, bloody Valentine's Day on us, sometimes in February in the stock market. No, also, I just thought I would draw to your guys' attention. You might have heard the saying before, sell in May and go away. Sell in May and go away. It's gotten very popular over the past 30 or 40 years in the stock market. And the reason being is, if you look at the monthly returns over time, usually the summer is bad, right? I mean, look at June, you're basically getting no gain. July is usually pretty decent, but then August, September, actually more times than not are down months for the stock market, which is kind of shocking because most of the time the stock market's going up, right? So the fact that those are actually down over this time period is pretty darn shocking. So sell in May will go away. Then a lot of people say come back in October, kind of ride the market through there. Me personally, I'm a long-term investor. I'm not worried about all that because even during this time period, they're going to have certain stocks making some insane moves. And if you miss out on that, I mean, you know, there goes a ton of your gains there overall, okay? Now, in the stock market, you have certain stocks that I call vibe stocks. These particular stocks make everybody feel really good about the stock market or make everybody feel really bad about the stock market, depending upon if these earnings are good for these certain sorts of companies, if the stock prices are moving up. Suddenly, if you have there's only a handful of these stocks that are really drive the entire sentiment around the market. When these companies come in with strong earnings, strong guidance, their stock prices go up considerably, everybody suddenly starts to feel more bullish about the market. Everybody feels more confident in buying stocks. And you know what else happens? You know what else happens? A certain something starts to breed into the stock market, and it's what I call FOMO, the fear of missing out. FOMO starts to come in the market when you have these market vibes, these I call them stock market vibe stocks, moving up. FOMO starts to come in the market because everybody's looking at these particular stocks and they start to say, oh my gosh, they just made another 5% move, 10% move, 15% move, 20% move. I got to get in now or I'm going to be left behind, okay? On the flip side, when these stocks are doing bad, they are reporting earnings that aren't very good, their stock prices move down on their earnings, things like that. People say, you know what, I don't need to buy in right now. Now is not the time. They make up a lot of excuses and those sorts of things, and there's no FOMO. And so there's only a handful of these stocks. You may be wondering, like, what stocks are these that are really the market vibes? I can tell you exactly what these stocks are, okay? These stocks are the 5 following stocks. These are the big vibe stocks in the market. They've been the vibe stocks for the past 10 plus years. They've pretty much been the vibe stocks for most of the time I've been in the stock market, to be honest, over the past 15 years, just to be honest, but certainly over the past 10 years. And these are the stocks: Netflix, Tesla, Both those are going to be very important over the next, let's call it 72 hours. I'll explain why, okay? NVIDIA, Apple, and Amazon. These are the big 5 stocks when it comes to sentiment, the vibes of the market. FOMO. Are people wanting to buy stocks? Are they not wanting to buy stocks? These are the sentiment makers, okay? Now, when it comes to Wall Street, they look heavy at Netflix and NVIDIA specifically. Netflix is usually the first big tech company to report earnings, which we'll get into here in just a moment. And NVIDIA is extremely important. And so Wall Street really pays attention heavy to those 2 stocks. Now, retail is a little heavier toward Tesla and Apple. So now Wall Street will pay attention to all, retail will technically pay attention to all, but in terms of the weighting, these are heavy Wall Street, these are heavy retail. Now, both I would say equally are kind of Amazon when it comes to retail paying attention and when it comes to, Wall Street paying attention. And so when Netflix and NVIDIA are flying, Wall Street gets big FOMO and they just want to buy. And that obviously was something that transpired last year, right? When these stocks aren't doing so well, let's say Netflix goes down big, suddenly Wall Street doesn't feel very much FOMO in the market. They feel like they don't really need to buy in. Same thing with NVIDIA. For retail, if Tesla's moving, retail's like, dude, I got to get in. I got to get Tesla now. I'm going to miss it. It's going to 400, going to 500. If Tesla's not reporting such good numbers, retail suddenly starts to feel a little less confident about the market, a little less confident about stocks in general. They don't feel FOMO. They're kind of like, I don't have to buy this week. I could buy next month. I could buy next year, something like that, right? Same thing with Apple. Apple's really important to the retail investor community in a substantial way, but Tesla's actually more important, believe it or not, for the sentiment of the market than Apple is. And once again, Amazon's kind of both there. Now, to illustrate this point, if you go to Robinhood, Robinhood shows you the most popular stocks on the Robinhood app, right, which is huge in the retail community. Guess what? 3 of the biggest bubbles are out there. Tesla, Apple, Amazon, right? So vitally important. Now, what do we have here in the next 48 hours is we have Netflix reporting earnings. Netflix is reporting Tuesday after the bell. Holy smokers, this ain't no joke. It's the first big tech company to report. Going to set the whole vibes of earnings season. And kind of what's my opinion here? Do I think Netflix is going to beat, miss, things like that, okay? Well, first thing you got to look at to understand kind of if a company is going to likely miss numbers, beat numbers, things like that. Do they have a sort of recent track record of beating numbers or missing numbers? And Netflix has been extremely shaky over the past year to year and a half. I mean, look at this. So of the past 7 quarters, they've only missed EPS 1 time. Now, that was a really bad miss on EPS, so keep in mind there, okay? So EPS is not usually the problem. What is the problem for Netflix is revenue. They've missed revenue 5 out of the past 7 quarters. And this is almost a miss right there. They only beat by $1.5 million. That's like almost, that's so close to being a miss. So they almost missed 6 out of 7 quarters for their revenue line item. So Netflix is in a shaky moment for that stock overall. And that should give some caution to everybody kind of out there about like, wow, if Netflix reports in a shaky quarter, that could definitely hurt sentiment here and get these stocks to kind of move down. Now, the good news for Netflix is the stock's not trading expensive. It's trading about 30 times 2024 expected numbers. Now, if that was some slow growth company that's like growing revenues 1-2%, you would say that is expensive. But for a company like Netflix that's growing their top line double-digit percentage, right, and growing their bottom line double-digit percentage, this is not expensive. Netflix is actually trading, believe it or not, cheap right now. It's trading cheap. Now, sure, would you want it at a 20 forward P? Sure. But it's very unrealistic for a top line, double-digit grower on the bottom line and top line for a quality company like a Netflix, right? So the stock's actually trading cheap at the moment, and that's something definitely it has going very well for it, right? Now, there's something that's going to hurt Netflix numbers in the short term. And if you use Netflix, you might have gotten a message over the past few weeks that says, save money, save a certain amount of money each month or each year by signing up for the ad-supported tier. They're trying to push people heavy toward the $6.99 a month ad-supported tier. And the reason being is what they're finding is they can make more money getting people in the $6.99 tier and then showing them a bunch of ads than they can if people pay $15.49 and don't have ads. And so Netflix is trying to push people heavy, but this is a fundamental change in the business model, and this could hurt. This could hurt Netflix's numbers in the short term. Because let's say in the very short term here, somebody leaves the $15.49 tier, they sign up for the $6.99. Well, in the very short term, Netflix could make less money from them over the next few months. But I can tell you over the next 6, 12, 18, 24 months, Netflix is going to make way more money from those people. So it's one of those things where Netflix is kind of maybe potentially hurting their business very short term in the terms of the next few quarters. But they could be helping their business. They're probably helping their business substantially long term, because that ARPU on a user is probably going to go from $15 to $20 to $30 to potentially $40. So you're getting a fundamental shift in the business model in a massive way, better for Netflix, but that's going to play out over the next 6, 12, 18, 24 months, not necessarily the next 3 to 6 months, okay? Now, this isn't the first time Netflix went through a fundamental change in their business model. They've done this before, and I would say that last fundamental change was even a bigger change in their business model, right? And this was going and getting everybody to go from DVDs to streaming. Now, some of you guys watching this, you might not remember Netflix as a DVD business. Netflix was the big DVD business, okay? This is what Netflix was back in the day. And if you go back 12 years ago, 15 years ago, that's what Netflix was. If you knew Netflix 12, 15 years ago, you didn't know it as some streaming service you pull up on your phone or on your smart TV or something like that. You knew it as this DVD business, okay? That was Netflix. So they had to change from that business model, and their stock got hit very heavily during that time period. Their stock actually didn't do very well. I looked into this company in 2012. By the way, the return since 2012 is over 5,000% for Netflix. That's a life-changing stock. Netflix has been a life-changing stock over the past 12 years, right? 5,000%, like your life has changed forever. You're one stock away from your life being changed forever for the better, right? Now, unfortunately, when I looked in this company, I was not experienced enough at that particular time in the market to really be able to make a strong opinion on where Netflix's profitability was going with the streaming service. So unfortunately, I wasn't able to buy in. I did buy in Netflix way, way, way later down the road, but unfortunately, I wish I would have bought back in when I looked into it. I wasn't sophisticated enough to understand, like, oh, Netflix is going to be, this sort of profitability in the future and things like that. But my gosh, 5,000% plus since 2012. Game-changing stock. Now, also, as a side note, I don't know if you guys know this, but this is pretty interesting. Netflix has always been a big customer of AWS, Amazon Web Services. Big customer of theirs. There's articles going all the way back to 2012. Netflix CEO Reed Hastings, we want to be the biggest business in the world 100% on Amazon Web Services, which, man, I mean, if you just bought Amazon at that time and Netflix at the time, you were looking pretty darn well, right? Pretty darn well. They've been a huge client, one of the most important clients of AWS over time. And when it comes to kind of a case study for AWS, look at this. This is back from 2012. The biggest benefit is the scale, Hastings said, which once again, Reed Hastings was the old CEO of Netflix. Now we're on a cost curve in architecture that as more people use it, gets cheaper. Netflix, of course, sells streaming entertainment, so does Amazon, as Amazon also sells DVDs and Blu-rays. But Hastings said that Amazon CEO Jeff Bezos was the CEO of Amazon at that time, right, has assured himself that it is safe to be on Amazon's cloud services, and Andy Jassy, who's now the Amazon CEO, told that to Amazon Web Services, Amazon streaming and Netflix streaming are just two equal clients. Netflix is every bit as important of a client as Amazon is. While cost and scalability are huge benefits of the cloud, especially since Amazon just reduced most client data storage costs by about 25%, Hastings also talked about what is not great for the cloud configuration. So, really intriguing that, it's crazy because AWS has been bringing down the cost of cloud substantially over the past 10, 15 years. But yet you look at AWS's business and it's just been a growth engine for the longest time, right? So just really, really fascinating to kind of see all this stuff from so long ago. This is a whole interview type thing they did in 2012. Andy Jassy, who was the senior vice president of AWS at that time, Reed Hastings was the CEO. I mean, just great to see the kind of that old stuff there. Okay, so Netflix report, huge vibe setter in the market. You can't be too confident about their numbers here short term, but I can tell you the stock's a buy. If it dips on any substantial dip on these earnings, it's a buy. So that's bottom line with that. It fascinates me how many people use Netflix religiously and don't own Netflix stock. It's almost sad to me, like to see so many people love that product so much. And I have friends that love Netflix. They watch Netflix every day of their life, and always have such positive things, and yet they don't own a share of Amazon, a Netflix. It's like, man, give back to yourself a little bit. If you watch Netflix religiously, own some dang Netflix stock. Please, come on, man. Okay. Alrighty, Tesla's reporting earnings Wednesday after the bell. So, how am I feeling about Netflix? What's kind of my prediction here in regards to Tesla? What's my prediction? How am I feeling about Tesla earnings here? Okay. Well, first off, I just bought some of the shares. I bought 35 shares at $214. Obviously, I've been a shareholder of this company for many, many years. I got shares dating back in the public count all the way back to May of 2019, right? So buying these shares recently, am I confident in a short-term bottom for Tesla? The answer to that is absolutely not. No, I'm not confident that Tesla's going to bottom here in the short term. I think we're closer to a bottom for Tesla, but am I super confident Tesla's going to bottom here? No, I'm not necessarily. But with that being said, this might be the quarter of bottoms here in the short term. Now, I am a little scared. Okay, we got positives and negatives here. I'm scared that they're not going to hit their EPS number. I'll be honest. Now, EPS is expected to be down 38% year over year. I'm concerned that it might be too high when I look at these EPS estimates of 74 cents. When I think about all the price cutting Tesla's done, and obviously they can offset a certain amount of that with cost savings in the business model. But guys, I don't know, man. I'm not super confident in that EPS number. If they come in and beat it, I'm going to be super happy about that. But I'll be honest with you guys, I'm not confident they're gonna beat that EPS number there. But on the flip side, I was looking at analyst projections for the June quarter and September quarter, and I think analysts are way too low in their estimates. I think they're way too low. I think there's a potential Tesla could actually bring up some pricing starting around those quarters. And I also think Cybertruck production is going to be flying at that particular time. So I think, if I look at the June quarter, analysts only have them growing 15% revenues. Then they have them bumping up to 29% in the September quarter. But I think those numbers are too low, guys. I really, really do. So this puts you in a weird dilemma where it's are you focused on the quarter they're about to report, or are you focused on the next few quarters, or are you focused on the long term? When I bought these shares the other day, I'm buying for the long term, right? Tesla's a long-term hold. I've owned the stock for years. It's a very, they continue to put up their numbers. They've been in a very tough demand environment for the past year and a half. I think that comes to an end. I think they will do well in the future. But let's be very clear about this stock. There's one thing, and one thing only, that will actually drive the stock the next day. And it has nothing to do with the EPS numbers they project. That will shake the stock after hours. Well, what EPS did they project? Or not project, post? What revenue did they post? But what's actually going to move the stock the following day will be one thing, and it's going to happen on the conference call with Elon Musk and the team. And that one thing is this: margin commentary. Margin commentary will be everything. If Elon Musk and the team have, let's just call it, positive things to say about margins as 2024 goes along, and they make some sort of comment about margins are bottoming in the next quarter or two, I'll tell you what's going to happen with the stock price. The stock price will fly. It'll probably hit 250 quickly and then go above that. That's all that, if they say that. If they say margins are troughing in the next 1 to 2 quarters, and then from there we're going to start to see them move up, game changer. Stock's moving and grooving. Because then everybody says, the bottom's in with margins, we're about to hit bottoms and margins, we're going up from here, it's off to the races. Because that's what's been killing Tesla stock, just to be honest, is the margins just eroding and eroding for quarter after quarter after quarter for a long time now. That's key. Now, if management team comes in and says, we're not confident margins are bottoming anytime soon in 2024, we're prepared to take prices even lower and to take our margins even lower or something like that, we're going under 200. If that's the commentary, because then everyone's going to say, oh my gosh, the price cuts still aren't done, they're going lower, margins are going to go lower. Everybody's going to throw their hands up and be like, oh my gosh, and Wall Street's going to flip out over that, and you'll see the stock under 200 the day after earnings. That's what it all comes down to, folks. The revenue, the EPS, all that, delivery numbers. I'm just telling you that's not moving the stock the next day. It's all about margins. And what do they have to say about margins, okay? So that's kind of my belief. Now, my belief is that margins will trough in the next 1 to 2 quarters. I'm pretty confident in that. I think we're going to hit trough margins in the next 1 to 2 quarters, and then we're going to start moving back up margins again. With obviously the price drops, I don't think Tesla's going up on prices right now. So I think they're going to probably keep prices pretty steady around the world for right now. Then you got Cybertruck, obviously, going into production. That's going to hurt margins in the short term. So I'm looking at the back half of the year. I'm looking at a Tesla that will likely start going up back on prices here and there on Model 3, Model Y, and for some upgrades and things like that. And then I'm also thinking about a perspective of consumer sentiment getting better maybe in the back half of the year. And then obviously Cybertruck being at big production in the back half of the year. That will help margins immensely. So I think margins trough first half of the year, and they start to pick up in the second half of the year, and then we roll with margins into 2025, and then we're having some fun at that point in time. So that's just my belief. We'll see kind of what happens there, okay? No. On Thursday and Friday, it's all about the economy. And this is going to matter substantially in market for Thursday and Friday because everybody's trying to figure out soft landing, hard landing. Everybody's trying to figure out when the Fed's going to cut rates or not cut rates. I'm going to tell you these 2 days are everything because you have American Airlines and Southwest Airlines reporting before the bell on Thursday, this coming Thursday. And so everybody's looking at those airlines and trying to see is there going to be any drop in demand for the airlines. If there is a big drop in demand for any of these airlines, that's seen as recessionary, which means it could, let's just call it take up the hard landing potential. But on the flip side, people will say, well, at least the Fed's going to likely cut rates aggressively in 2024, right? If on the flip side, these guys say, hey, demand's really strong, then that puts more into the soft landing, but then that puts into, the Fed might not lower rates as quickly as maybe we thought, right? I think the best case scenario is these airlines kind of report so-so earnings and so-so guidance. I think if they do that, it's not super exciting, but not super depressing. I think that's best case scenario because then people will still get confident about rate cuts, but then, still confident about a softish landing rather than a hard landing if they're just reporting kind of so-so. Now, Visa and Amex and Norfolk Southern all report, obviously Visa's after the bell on Thursday, and then Norfolk Southern and Amex are before the bell on Friday. And those are huge for the economy because guess who's running all the dang transactions in the world? Like Visa and American Express, they're the transactions runners. And so those are just great, those are great companies in general, but those are two great companies to get intel on how much the consumer is spending out there, especially in the United States, but even a little bit more on the worldwide stage as well, but certainly in the United States of America. Norfolk Southern, also very important. Anytime the rail operators are reporting, whether it's a Union Pacific, Norfolk Southern, CSX, those sorts of companies, or if you're ever getting a situation where it's like the trucking companies or UPS, FedEx, companies like that, they're a really good gauge to kind of understand what's going on with the economy, or if they feel confident, not confident. Once again, that gets into soft landing, hard landing. That gets into, are we going to see rate cuts this year? If we are, how aggressively? Those sorts of things as well, okay? So huge days for the economy. Now, I posted this in the Discord chat in the private group yesterday. And I thought this was really something interesting I saw on X. And it said, the S&P 500 closed at an all-time high on Friday, right? The Russell 2000 is still in a bear market, down more than 20% from its highs. This never happened. That's never happened before, which is shocking. I mean, for anybody that's been in the market for any point, any time period, especially if you've been in the market for 10, 20, 30 years, shocking. That doesn't happen. What? How is the S&P 500 at an all-time high and the Russell still in a bear market at this point in time? Crazy. Freakish. Freakish. That's the best way I can put it. It's not going to stay like that. It's not going to stay like that. It is like that, but I can tell you it's not going to stay like that. And, I reacted to a video. I think it was this video here, but it was certainly a video in the last few, because, on the reaction channel, I'll not only react to whatever's the headline, but there's usually a few other videos. And Tom Lee doubled down on his Russell 50% call for this year. But it was interesting because in his latest interview, he mentioned not only 50%, but then he mentioned 60% for small caps this year. So he, if anything, took it up. 50 to 60% rise. Now, he also believes the market's going to be weak in the short term. So which means maybe this earnings season is going to shake the market downward. I'm not super confident in that. But that's kind of his belief. But yeah, he thinks Russell's going to end up this year 50 to 60% higher. I'm just like, what? Like, I'm not that bullish on small caps. Like, these babies are due to make an epic run, but I don't know if it's that epic, as in like 50 to 60% a year. So we'll see what happens with that. Now, I will be live streaming Tesla earnings on Wednesday after the bell. So I'll have my Twitch channel as pinned comment down there. I'm only going to use Twitch for big earnings live streams now at this point in time. So make sure, if you want to join me for the Tesla live stream, make sure you got notifications on for that. So it'll notify you when I go live. That'll probably be about a 3-hour live stream because we'll react to all the earnings coming out. We'll also react to the conference call with Elon Musk and the team as well. So that will be on Wednesday. So pin comment down there if you want to follow me on there. And then anytime there's going to be big earnings this earnings season, PayPal, Amazon, Palantir, those sorts of companies, I'll likely live stream those after the bell on Twitch. So just, if you care about that, follow me on there, okay? Much love as always. Appreciate y'all joining me. Get ready to get your flapjacks flipped and have a great day.